Hello guys, it's your boy Young Diamond. I welcome you once again to this yet wonderful video. Now today we'll be talking about insurance. In our previous video we talked about the role of insurance in financial planning. Now we're going straight to insurance, the main topic, which is insurance. Now insurance is an agreement by which a company or a state undertake to provide a guaranteed compensation for specified loss, damage or illness or death in return of a specific premium. So insurance is more or less a risk coverage that protects you from sudden or unpredicted losses. Now an insurance company or an underwriter, or you can say insurance carrier, is a company that sells insurance. So whenever you're out there, you hear the word an insurer or an underwriter or an insurance carrier. These are companies or agents that sells insurance policy. So these are the people that gives you the right policy in order to guide you in anything you're doing. Now, a policy holder is a person or entity who purchase insurance. Remember in my last video, I talked about the non-financial banking institution of which insurance falls under. So, a policy holder is a person or entity who purchase this insurance policy. While an insured is the person or entity who is covered by the policy. So, the policy holder accepts a guaranteed, predictable, and generally minor loss in exchange for a payment called premium to the insurer. Now, the holder of this insurance accepts a predictable loss and of which they pay a quota to the insurance company in exchange for assurance that the insured will be compensated in the event of a covered loss. So, as a policy holder, if I purchase an insurance policy, it is likely to cover for an unpredicted loss. So, in return, I am paying a quota called premium to cover for these losses if eventually it arises. So the loss can be financial or non-financial losses. So, but it has to do with something that the insured has insurable interest. So before you are insuring anything that you are having, it must be of utmost interest to you that when the loss occurs, it is damaging. So that is what will be insured. So the insured is always given a document known as the insurance policy which they bought or purchased that tells them the terms and the conditions under which the insured can be compensated. So this part is very, very tricky, and everyone will have to pay utmost attention to this particular part, whereby the insured is given a document to sign. Because each time you go to purchase any insurance policy, you are given a document to sign. It states the rules and the regulations and the criteria in which any damages can be paid, and the criteria in which any damages will not be compensated for. So whenever you are insuring, take note, you don't just insure and then you decide to just do whatever you like with it, expecting that in return, if anything goes wrong, you will be covered. No. Because before an insurance company compensates you for any damage or any loss, they also have to do their own investigation to ascertain the true cause of the incident or the damage that came on board. So premium is the amount of money charged by the insurer to the policy holder. So that's the terminology that is used in the insurance industry. They call it premium. So whether you are doing a health insurance, house insurance, fire insurance, or what have you, the quota you are paying to the insurer or to the insurance company is called premium. So straight ahead, we'll be going to house insurance. Now, house insurance or property insurance covers for the risk of unpredicted losses that may arise within your property. So either you call it property insurance, house insurance, home insurance, or what have you. So it has to do with properties, it has to do with building, it has to do with structures. So this type of insurance, it covers for the main structure of your home. So if the main structure of your home is damaged due to a series of conditions, it covers for them. But mind you, they have diverse forms of insurance under the property insurance. So it is now left for you to decide which parts or your budget for the insurance that you are going for. So whatever policy you are including in your house insurance comes also with an increased quota or with an increased premium you'll be paying to the insurance company. So usually housing insurance covers in the event of earthquake. Earthquake happens around the world whereby houses get damaged due to the magnitude of the earthquake, due to movement of the earth crust. So if your home is insured, or if your house or your property is insured to cover for earthquake damages, which means you will be compensated due to the earthquake. And also it covers for fire and lightning. So we also have the fire insurance that falls under the property insurance. So it covers in terms of fire outbreak or any damage that might be caused by lightning. So just like a popular celebrity in Nigeria some time back, it was called that his house just caught fire and it was burned to the ground. Now, if that property is insured for fire, definitely you will be compensated for the loss or for the damage. Because remember, insurance covers for an unpredicted loss or damage that may arise. So if you insure your home for fire insurance or for fire, definitely when fire engulfs your property and the investigation is done that it was not intentional, then you get compensated. So it also covers for explosion that may arise due to pipeline leakage or what have you. So just like one that happened recently in Nigeria that was caused due to an explosion. We were told it was a pipeline that exploded. And some years back, it also occurred. If this property are insured, the property owners need not to be scared because why they will be compensated, even if it's not 100% compensation, but they will be compensated well enough to go about it. And to those who are doing business, who sells in the marketplace, own shops, and if your shop gets involved in fire incident, then you'll be compensated for it. That is where you see markets get burned down and millions goes down the drain. And at the end of the day, they get blood pressure. Some are rushed to the hospital. Some are likely not will not be able to make it. Why? Because their whole life has been invested in that business or in that property. And at the end of the day, got engulfed in fire. And then all the mindset will be, where do I start from? How do I go about it? So insurance will help you cover for those, but it will give you a coverage that will give you a legal standing when this incident occur. So it is not something to be taken for granted. Yes, it might seem as if you don't need it, you are wasting your money and all that. No one prays for incident, no one prays for anything bad to happen. But the truth be told, 1 in 100 gets involved in such. When it comes to explosion, when it comes to fire, when it comes to earthquake. We also have the flooding incident as well. So the property insurance also covers for flooding, where your house gets flooded by erosion, by heavy downpour, and your property gets damaged. So insurance also, so when flood gets into your property and then damage it, you get compensated for it. So it also covers for cyclone, tempest, tornadoes, even landslide. So these are unpredicted losses that might likely to occur. In most cases, it doesn't occur, but in most cases, it occurs. That is why insurance is a risk. Insurance is a risk. So which means the incidents might likely to happen or might not. So, but you have to be prepared for it because when it occurs, you are left with zero. You are left with nothing. So, housing insurance or property insurance also covers for repair and replacement of essential damages caused by any impact. So, most insurance policy they add also repair and replacement. So, if for instance you have a property and you have furnitures inside the property, and then you also insure your property, so it also covers for those. So, if there's any essential damage that may arise in the property, definitely it covers for that as well. Maybe when it comes to repair, the pipe gets damaged, something happens, all you have to do is to call the insurance company, they come, they fix it up for you. If it's something they have to replace, they will have to replace it because it's an unpredicted loss that has occurred. So it also covers for your loved ones in the house in case of any damage done outside. You know, if you are insuring your house where you live with your family, usually they will ask you how many people are living in the house, and they would want to insure the people that are living in that particular apartment. Why? Should in case there's any damage they cause outside, then because they are living in that property covered by insurance, it will also cover for the damage that they will also cause. So if you are living in your house, you do your property insurance and also add your family members to this policy. Then if they cause any damage out there, instead of you to spend money from your pocket, the insurance company will take care of it. The insurance company will take care of it. So it covers for your loved ones living in that particular property. So another one that is of most crucial importance when it comes to property insurance is protecting the mortgage, especially if your house is on mortgage in the event of death or disability. Now this is very common, especially when someone buys a property or buys a house or an apartment. Nobody pays for death or sickness, and suddenly, few years down the line, the payment of your mortgage before ill and you die. Few years down the line, you fall ill and eventually you are called to glory. Now, if you did the protect the mortgage, then the mortgage will be scrapped, which means automatically the house becomes that of your family. So they won't have to pay a dime. Let me put it in clear context or proper context. Now, if I purchase an apartment, let's take for instance for the duration of 15 or 30 years, and down the line, 7 years, 8 years down the line, something happens to me, the mortgage will be cancelled. Why? Because I have done an insurance to cover myself in the event of sudden death or sudden illness. So you can also add that of disability to your insurance policy. What does this cover? It covers in the event of disability, maybe due to accident, due to illness, and you are unable to function, then the mortgage is cancelled on that property. So many property owners today they always protect themselves against the mortgage so that when anything happens to them, their family can take over mortgage free. Even if a sudden death occurs 7 years down the line, or even if you have a 10 years payment left to make and then sudden death occurs, the mortgage is cancelled. So this is very crucial, especially those living in diaspora. So if you have an apartment Make sure you insure yourself against the mortgage you collect from the bank or from the financial institution. Because if anything happens to you, the mortgage is cancelled. Then your family will not be thinking, running head scatter on how to meet up with the instrumental payment to the bank. So it is very important to insure yourself against the mortgage. So there are so many policies that can be added to this property insurance. So it all depends on you and how much you are willing to invest for this unpredicted loss. So I could insure myself, or I can insure myself in the sense that if anything happens to me and I'm not able to work anymore, the mortgage is gone. Or if the doctor gives a report that says this person has become invalid, which means he cannot function in his own capacity, then the insurance will cover for the mortgage and the mortgage will be cancelled. So many people have lost their properties. Why? Because they did not insure themselves against this unpredicted and unforeseen loss. Some when they get disabled, they are not able to work anymore, they are not able to pay their installment, the bank seizes the property from them. So remember to always insure yourself, insure your property. Nobody prays for loss, but definitely once in a lifetime. If it does not happen to you, it might happen to someone you love. Start preaching the message both in diaspora, in Africa. If you have a property, make sure you insure it against unforeseen losses. There is a higher percent chance that it will occur. Not to you, probably your family members, it might happen to you or someone you know. So let's start preaching the message of insurance because the disaster going on, especially in Africa today, is on the high side. Whereby if it's not explosion, building collapse. If it's not building collapse, fire engulfing the house, the marketplace, anywhere. So protect your property from any damage. Do not look at the expense or the premium you are paying, but in the long run, it might benefit you. It will meet again. Like, share for more. Peace.